Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news that, with a few notable exceptions, commodity prices are soft across the board. The overnight dairy auction brought a 2.3% retreat, principally because the powder prices fell. Whole milk powder was down 2.8% and skim milk powder was down 5.2%. However, cheese was up 4%, the only ingredient to show a gain. The overall decline was the first of the year and the only significant one in the past 15 events. Last week's GDT Pulse events retreat signalled that this correction was on the cards. One retreat in 15, however, isn't significant, and at this point it is unlikely it will cause any analyst to change their forecast payout levels. Last week's retail sales in the US rose 3% from the same week a year ago on a same-store basis, just enough to stay ahead of inflation. The American middle class is still creating the core consumer demand that essentially powers the global economy. But the same was not true for factory orders in January, which were down 1.6% on the same basis. From December, they fell at a sharper pace. However, the American services sector was still expanding in February, even if it was marginally back on the fast pace in January. And this expansion was confirmed in a separate internationally benchmarked services survey. Encouragingly, American vehicle sales rose to a 15.8 million annualised rate in February, and almost 6% gain on January's rate, and that puts them above the recent long-run averages. A major set-piece meeting of the People's Congress in Beijing has seen them set about a 5% growth target for 2024, but even the Premier who delivered the target acknowledged it'll be a reach. But analysts see this as a target without a plan, and there is unlikely to be any support for global commodity prices from it. The sharp retreat of foreign investment is drawing calls for action to reverse the slide. Australia delivered a bumper current account surplus in the fourth quarter of $11.8 billion, and much more than was expected. This was their best 2023 quarter, taking the annual current account surplus to almost $32 billion. That probably means their fourth quarter 2023 GDP activity will be positive too, helped by a slump in imports and less Aussies making overseas trips. Australian fourth quarter GDP results will be released later today. And January air cargo data was released overnight, and it pointed to rising demand and a strong start to 2024. International air cargo demand was 20% higher than a year ago level, even better in the Asia Pacific region. The US Treasury 10-year yield starts today at 4.15% and down 8 basis points from yesterday. And the price of gold will start today up $9 at $2,126 an ounce. That's another new record high. But oil prices are down 50 US cents at just over $78 a barrel in the US, while international Brent price is just over $82 a barrel. And the Kiwi dollar starts today at just on 60.9 US cents, marginally softer. Against the Aussie, we're holding at 93.6 Australian cents. Against the euro, we've eased fractionally to 56.1 euro cents. That all means our trade-weighted index starts today at just on 70.2 and down another 10 basis points. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this